now, secured entrepreneurs. In this video, I'm going to answer your questions about Biden's proposed tax plan and how it affects the secured entrepreneur. I'm reading your emails. No need to panic. You know Ms. Aurorah has your back, and I want to thank you for emailing me. Please continue to do so at info@aurorahdayconsulting.com. I'm going to go to the board and I'm going to show you what's going on with this proposed tax plan. So let's get into it. You already know I am Ms. Aurorah Dey, and this is the Secured Entrepreneur Movement. So here's the secured entrepreneur quadrant, all right? We got the sole proprietor. You may be using a DBA. You may have an LLC, so you think you have protection, but you're actually a single member LLC. Ridiculous. This is a sole proprietor that actually has a cash flowing money engine, okay? So you're cash flowing right here, but you're self-employed. And you may also still be a DBA here. And you may also still be a single member LLC here, okay? Here's the CEO. Here's, travel from SP to CEO up here. So you may have a business that is properly structured, okay? Now I know that a few of you who are doing corps, because you're telling me you are actually incorporated, but you have less than 500 employees. As a matter of fact, you have less than 50 employees. So we would have to really see about why it is you incorporated in the first place, because that's double taxation. But I'm not going to get into that in this video, because in this video we're really talking about the changes to the tax plan and how that affects the entrepreneur who is operating in commerce incorrectly, okay? And then here is the secured entrepreneur. So you're in the investor space. You got some JV collaborations, okay? So let me go here. So as the sole proprietor and the DBA, you're doing a DBA, and you may have a single member LLC, but you're earning less than $400,000. This is less than $400,000. No matter how this shakes out, you're still going at the 60% tax. You're still up here. Why? Because under the new proposed plan, okay, and I don't want to get too deep into it because it's not, we don't have it yet, but this is what's being proposed, okay? So if you're here as a sole proprietor, you're making some money, went out there and got a DBA, you registered it with your county, you got a bank account with, you may have gone to the IRS and got an EIN for a sole proprietor. You may have went up on LegalZoom or whatever these paper mills places, and you got an LLC in a state, but it's not properly structured, and you are still filing a 1040. So you're paying self-employment tax, okay? And the itemized deductions that you would have had are no longer available to you. There's going to be a lot of cuts with itemized deductions, okay? So this is bad all the way around. Then, of course, now you've got the sole proprietor, and this is really who has the red dot on the forehead. This is the red dot on the forehead space right here. Because you're cash flowing, if you are making more than 400K, this is where all the taxes are going to start, okay? So now there is a 28% situation going on here. And let Ms. Aurorah explain that to you. Before I get into the 28%, let Ms. Aurorah back it up and explain something to you. No matter what, in this space, you are already at the 40% tax, okay? How did you get there? First of all, the current rate of tax here for the individual taxpayer in this position is 37%, okay? And then you tacked on the 16% self-employment tax and whatever deductions that you were not able to get, you don't have children, things of that nature, you ended up at 40% or more, depending on how much money you claimed especially if it was over $200,000 and you didn't really have any deductions, you were facing the 40% in this space, okay? Now, so because it's currently 37%, the current proposed tax change is going to take it from 37% for the individual taxpayer who is earning 400K or above to 39.5% tax, okay? So now you're going to tack the 16% self-employment tax on there, and the deductions that you may have had previously, you will no longer have, because at the 400K and above, now there's a cap of 28% cap on the deduction. This is what Biden is proposing, okay? So the dangerous part here for the sole proprietor, who is not a secured entrepreneur yet, is that you are cash flowing. You do have a money engine, but you're still operating like a sole proprietor who maybe just has a DBA, or like I said, you have an LLC, but it's a single member LLC. It's not structured properly. You're still filing a 1040. You have an individual tax return, okay? And so you're still in here at the 60%, okay? And I don't know what it's going to shake out as, okay? Because this is the preliminaries that we're able to get right now. It's not etched in stone just yet, okay? But under 400K, you're not doing too bad as far as the tax that you pay when you're operating in commerce incorrectly. It's when you get down here and you're making more than 400K a year and you're filing as an individual taxpayer regardless of what business you think you have, because you're not in business here, okay? You really don't get into business till you get here, okay? And we got a news flash here. So I was saying that for those of you who were saying that you haven't you've incorporated your company, but you don't really have more than 500 employees, well, you really is still a small business, so you have to justify the reasoning for incorporating, because now the corporate tax rate under Biden's proposed plan is now going to go back up. Let me see. Going to go back up. Right now, we're at 21. We're 21, 20 to 21% tax. It's going back up 28% for corps. Okay, it's going back up 28%. All right, but when you are in this position, all right, you're really, when you're operating in commerce properly, you're at the 20% tax rate. Now, like I said, the corporate tax is going from 20 to 21 right now to 28%, okay? When you're operating in commerce properly, you're going to be between 20% and 0, and I'm going to tell you why. The reason why you can be at a 20% to 0 in this space right here when you're operating in commerce properly and you have a real business is because you will now have the opportunity to utilize all of the legal tax deferral strategies possible, okay? It is all of our jobs to have the correct legal entities, okay? So even if you're here, and I'm really singling out single member businesses, you actually are a single member business, but you're operating all wrong. You don't have the correct legal structure. You're not collecting monies properly. You're still filing a 1040. And see, because you want to pay yourself, okay, I tell people all the time, if you don't read Rich Dad, Poor Dad, I don't know what to tell you, because you have to come away from putting yourself on a payroll. See, right here in this area, you're getting hit hard if you have created a payroll and you're on it, okay? You're on it. Even if you're here as a corp and there's a payroll and you're on it, you're still an employee, okay? You're in the 60% right here as an employee, okay? You're an employee. You're paying all the taxes that an employee would pay, okay? It's not a joke. right here, okay? When you're here and you're operating properly, you are giving yourself every opportunity to create a pass-through tax scenario, okay? So now I'm passing the tax through to another entity, okay? I have no interest in collecting a paycheck. I'm wealthy, all right? I've got entities that take care of me, and I'm not going to get into it in this video, but Biden also has something as it relates to the estate gift tax and all these things. That's another video, and I could stay up all night getting into that, but I won't. Okay, so we want to be here to zero. We want to be here to zero. Okay. Now we're going to come down here to the secured entrepreneur. Zero tax. Okay, because let me tell you, Biden has something for people who are earning more than $1 million a year as well. So when you get down here, what's happening? You have all of your entities in place. You have deployed, utilized, strategized. Remember, this is about tax planning, controlling, and managing, okay? So that means that I'm using every tax deferral strategy, all right, so that I can create and build tax-free wealth. Okay, this is the name of the game right here. So you all know that if you are not operating in commerce properly, you need to click the links below and get on Miss Aurorah's calendar. It's more imperative now more than ever, because it looks like Biden is going to take office, okay? And if you're the sole proprietor, which many are, because everybody's cash flowing right now. We have all come up in this pandemic. I don't know anyone personally in business who has not flourished during the pandemic. I kid you not, okay? So you're 400K and above for the year, all right? You got a cap on your deductions. It's a 28% cap, okay, buddy? All right? You're going from 37% taxation to 39.5% taxation. You're still hitting the 40 and above tax, okay? You're still living the 1040 lifestyle. You're still a sole proprietor. It's not gonna work. Give it up. You need to be here. You need to go from sole proprietor to CEO, okay? And then straight on down to secured entrepreneurship, where you're going to be able to mingle with like-minded business people who are operating the same way in commerce, legally avoiding taxation by deploying all tax deferral strategies, okay? That's what I want to say in answer to what you all are asking about how Biden's tax plan may affect the entrepreneur. Well, it might not when you're operating in commerce properly. All right, now Mr. Aurorah gave you a little bit of it. There's a whole lot more, and we can get into it as time goes on. But for those of you who know that you're operating in commerce incorrectly, go down below, get on Mr. Aurorah's calendar. Let's get it in, okay? And you already know that you can find me, Miss Aurorah Dey, at AurorahDayConsulting.com. And until next time, ta-ta.